Hello traders, my name is Anthony. So welcome back to this video. And today's video we are going to look at the major versus the minor inducement. So before I explain in details what is the major and minor inducement, so first of all, let me take this opportunity to thank you guys for showing interest on viewing my videos, liking my videos, and also commenting. So So make sure you keep the same spirit. And if you haven't subscribed to the channel, kindly make sure you do so. So without a further ado, let's come down to our video. So I believe now at some point when you are learning the trading, I believe this is not the first time that you have heard the word inducement. Now the question is, what do you understand by the term inducement? So for me, in my simple explanation or in my simple definition of what is an inducement, so inducement simply means a trap. So these are the set of traps that are left in the market by the institutions to lure the inter, me and you to uh, into these traps so that you get liquidated before you know it. So once you master how to identify the inducement, then now I can tell you you are good to go. Now that you know inducement simply means the trap. Now, how do we identify these traps on our charts? So don't worry. So stick to the end of this video. Then I can assure you by the end of the video, uh, I will show you everything to do with inducement. So now from what you can see on the screen, you can see here, you have the major versus the minor inducement. So in a bullish scenario, now this is where I'm explaining these traps that I'm talking about that we call inducements. Now, in a bullish scenario, we'll find that this is a liquidity resting below the low of a recently formed valid pullback in an impulsive move. So this is what we call an inducement. So in a bullish scenario, when we find that we have a liquidity resting below the low of a recently formed, sorry, this is let me back, formed, recently formed valid pullback in an impulsive move. Now, what am I talking about? So, for example, if you have a market trending like this, so you'll find that here we have a break of structure, we have a break of structure here. So these lows here, these are the lows that we are talking about. But now don't worry, I know you're asking yourself, which one is the minor and the major inducement? So don't worry, I will show you all of that. Then in a bearish scenario, we'll have a liquidity resting above the high of a recently formed valid pullback in an impulsive move. So if you don't know how to identify a valid pullback, so make sure you find a video of my channel. I have a video explaining how to identify a valid pullback. Now, it is just the opposite of what I've illustrated there on a bullish scenario. So those are what we call the inducement. Now the question that is ringing into your mind is how now do I differentiate which one is a major inducement and which one is a minor inducement? Then I have this illustration here. Now that we have looked at or we have defined what is an inducement, so we have seen the definition of inducement in both bullish and bearish scenarios. But now the question is, how do we identify which one is the minor and which one is the major inducement? Then now, we have the inducement here being classified into two, whereby we have the minor inducement and the major inducement. Now, talking about the minor inducement, so this one occurs and the key point is before. So you underline the word before or you make sure you note somewhere. So this is the liquidity which occurs before the break of structure. Now here, I have to see first of all a valid break of structure. And if you don't know how to identify a valid break of structure, so on the description of this video, I will leave a link that will direct you to the video that I made on how to identify a valid break of structure and also a change of character. So, and when I talk about the break of structure, it doesn't mean that the change of character does not apply or does not. So this applies in both break of structure and also a change of character. So the liquidity that is formed before the break of structure, it's what we call a minor inducement. So don't worry, I will show you in an illustration. So, and now we have a major inducement. So major inducement is the opposite of minor inducement. So with the major inducement, so this one occurs after the break of structure. So first of all, I need to see a valid break of structure. And if the next structure that will be formed there after the break of structure, that is, we'll have a valid pullback in an impulsive move, then that structure now, the low of that structure, I will mark it. The low, it is either the low or the high, depending on are we in a bullish scenario or in a bearish scenario? So the structure that will be formed after the break of structure or the change of character, that will be our major inducement. Now I have two illustrations here on both minor and major inducement. So you need to pay a lot of attention here, guys. So I will just I will not talk in detail. So now to identify this valid break of structure, but briefly, I will touch on that. So, if you have been in this channel for a while, you know very well how we mark the break of structure and the change of character. So, what should I see first? And also, I have a video on the checklist, my trading plan. I have also explained whatever I'm about to explain here. So make sure you watch the video if you haven't watched the video. So first of all, I need to see an inducement being taken out, or I need to see a sweep of liquidity. So when I'm talking about this inducement, so your mind now should know I'm talking about either major inducement or minor inducement. It doesn't matter which one has been taken out, provided I see a sweep or a run of liquidity. Now here, you can see here, this low was taken out by uh, this impulsive move to the downside, or this pullback took out this inducement. Then after that, left a low here, then I went ahead and broke the structure. So this is what we call a valid break of structure since it swept liquidity. Now, after that, we see the market pulled back and swept this inducement before pushing again to break the structure. So this is also a valid break of structure, but that is not what we are talking about here. Now, which one is a minor inducement? Remember, we have said here, a minor inducement occurs before the break of structure. So now I need to see, remember here we said what? It's a liquidity resting below the low of a recently formed valid pullback in an impulsive move. Now, which is a valid pullback here? Assuming now this impulsive move to the downside, it's not there. So, which is the low that we are talking about? And this is our low here. It is uh, it is a low formed, the recently formed low before a break of structure, and this low should be a valid pullback. Now this low, you can see this structure that was formed here, it was formed before the break of structure. Now this is what we are calling the minor inducement. I don't know whether you are getting. I'll repeat that. It is a low, any internal structure that is formed before the break of structure. Now, whatever we'll have here before the break of structure becomes the minor inducement. It doesn't matter how many structures are there. As long as you have the structure that was formed before the break of structure, all that qualifies to be the minor inducement. I believe we have understood that. Now, moving on my right, I have the major inducement. So the major inducement is quite the opposite of what we have talked about there on a minor inducement. So we need to see the same scenario here. We need to see a sweep of liquidity, then a valid break of structure. But now if you look at this one, we don't have any internal structure that is formed before the break of structure. And you see, in this impulsive move here, there was no any structure that was formed here. There is no any valid pullback, or in other words, there is no any pullback. The only pullback that you can see, it is after the break of structure. And you know very well the major inducement now occurs after the break of structure. And guys, remember in my illustration here, I'm only showing the bullish scenario. So you will just do uh, the same thing with the bearish scenario. You just apply the same concept. Now, you can see here we have a valid pullback here, then a push to the upside. Remember, a beginner, someone who doesn't have enough knowledge on a SMC, this kind of a trader will try to look at setup from this low here. I believe we can agree. Even I know most of you that you are watching this video, you are struggling with this inducement. That's why you are watching this video now. I know this beginner trader will try to look for a buy from here. Then all of a sudden you find that you are being taken out. Then you are wondering, why did I take that loss? Then you will find that the market will take you out. Then finally it will move to your direction. Then you are left wondering, where did I go wrong? Now, that's why you are watching this video, and after watching this video, I believe your problem will be solved. Now, I now want you to start practicing this strategy immediately after you have watched this video. And I believe and I know you will come back here and thank me for this information. Now that we have this pullback, then a break of structure. For me, this break of structure, this is what I call a fake break of structure. This law here, I know very well, this law will act as a trap. This law will be an inducement, a trap. So this is a trap set by the institution, or we call them in quote the big boys. Uh, these are the institutions that move the market. You know, my $100, my $1,000 does not move the market. But now, these big institutions that they move uh, millions of dollars, they are the ones that they cause those movement that you see on the charts. Now, this law now here, it's what we are calling the major inducement, since it is formed after what? A break of structure. So, and remember, this law must not have swept any liquidity. That is another point to note. This law here must not have swept any liquidity here before breaking the structure. If has already swept the liquidity now, this law is not a major inducement. So this will be a swing law. Remember here, this is our swing low, this is our swing high, swing low, swing high. That is the external structure. But whatever is inside, we call it the fractal structure, or what you call the internal structure. Now, I believe now you have understood the difference between the minor inducement and the major inducement. Now, I'm going to take you to the charts and see some examples on how uh, on both minor inducement and major inducement scenario. Now here on my chart, I am on a Euro JPY chart. Now, looking at the chart here, you can see very clearly I have a valid break of structure. And why am I saying this is a valid break of structure? Because if I can start from this side, let me start from here. Let me start from here. You can see very clearly this impulsive move to the upside, or this, what you call the pullback. They did sweep liquidity. You can see very clearly that move swept the liquidity. So we have an inducement being taken out before the break of structure. Now, after our break of structure, where do we see the liquidity? Where is the liquidity? Now, if I go down to the lower time frame like that 15 minutes time frame, if I go down to this 15 minutes time frame, let me zoom in here. Where do we see the liquidity? You can see very clearly. And let me repeat this point. Let me say this point. Whenever market takes out the external structure, whenever market takes out the external structure, whatever was inside here becomes the liquidity. Whatever the structure was inside here becomes liquidity. That's where we'll find that before the market pushes and breaks the another structure, you'll find that it will take at least one of the internal structures before pushing and break another structure. And you can see very clearly here, after this break of structure, we had a small pullback, then push to the downside. Now, this high here, I hope you can see it. This high here becomes my major inducement. I hope you understand. We said major inducement comes after the break of structure. So we have a break of structure, then a pullback, push to the downside. So this high becomes a major inducement. Now this here is also an inducement. And this is what we are calling the minor inducement, since it occurred before the break of structure. I hope you are getting, guys. So that's how you mark the what? The minor and the major inducement. Now for a beginner trader, maybe this kind of trader is looking for a setup in a lower time frame, like 5 minutes time frame. So you'll find that a beginner trader will try to look for a setup from here or from this order block. Then what happens? Then you can see that for some few pips, this trader was in profit. Then all of a sudden, you get taken out. Because now this trader, what mistake did this trader make? The market took out the external structure. So that means what? Whatever was inside here became what? Uh, became the liquidity. Now moving to the next structure. Moving to the next structure, you can see very clearly here. This I took out this I because this is also an inducement. Remember, I've told you what, guys. Market will hunt for liquidity first whenever before breaking another structure. And this you can see that this I was swept by the high of this candle. We have liquidation there. This I swept this I. Remember, this is a what? A minor inducement. Then we have a break of structure. After this break of structure, we don't have any valid pullback here. So we don't have any inducement that was created after the break of structure. So the only inducement that I can see here, it is this inducement here. Now, for a second now, I need you to tell me which type of inducement it is. And if you have said it's a minor inducement, you are correct. This is a minor inducement since it is formed before the break of structure. So I expect the market to take out this liquidity before I look for another sell setup. So I know very well now, after this break of structure, if I start to see market pulling back, now I will not look for a setup from here. But if now you are a beginner trader, you will find that you will start looking for sales from this area here. Then all of a sudden, you are left wondering, what did I do wrong? Because now you find that for some few pips, market will react. Then all of a sudden, it will pierce through your order block. Then you are wondering, although you can argue that we are bearish, it's okay. But now your point is that you don't know where to mark as your point of interest, where to take the trade. Now I believe now you know how to identify a valid, know how to identify minor and major inducement. Now I think I've shown you both major and minor inducement. Now I will show you an example of major inducement on a trade that I took this week on Nasdaq. I had trade on Nasdaq this week, and this is the trade. You can see very clearly here. Uh, Market came to this point of interest. This is my order block from the higher time frame. That is, I think it was from 4 hour or 1 hour time frame. Now, as always, I was waiting for a confirmation here. I was waiting for a confirmation here for me to take a sell. Then this is what I saw. So we have a pullback here. Market swept this low, then pushed to the upside. So I knew very well this low is a strong low. So I was waiting for the market to violate this low. Then from here, I'll start looking for what? For setups. Now, after seeing this low taken out with a candle closing below it, then I knew very well now I have my change of character. So it was a time for me to start looking for sells. And then now, the next question that I always ask myself, where is liquidity? Where is the inducement? And you can see very clearly, guys, we have a break of structure here. And this break of structure, I know very well, this break of structure is an inducement, guys. Since it never swept any liquidity. All this up to here, it's one push. Remember, someone might say that this is a pullback. This is not a valid pullback. From here up to here, there is no any inducement. So the only pullback it is this one. From here up to here, then you have push to the downside. Now a beginner trader will see that this is a break of structure. Then what will this trader do? He or she will start looking for sales from this area. But now me and you now, because we know we need to see liquidity and we know very well that this is a fake break of structure. So we will not take trade from here. So what we will know that this high here will act as an inducement. And which type of inducement is this? Remember, this inducement was formed after the change of character. So that means what? This is a major inducement. So I knew very well this high is likely going to be taken out. So I marked this one as my point of interest, and that is where I executed my order. And you can see very clearly this trade was a win since it was 1 is to 4.59 risk to reward trade, guys. So you can see now how important it is to master how to identify these inducements. Because if you don't know how to mark or to identify the inducement, that means you yourself, you will be inducement to the market. So from today now, I believe I've opened your eyes. So the remaining work is upon you. Make sure you practice from the charts. Just do a lot of back testing, do a lot of testing. Make sure now you practice on how to identify the inducement from the charts. Are we together up to there? Now, I think I would stop at that point. I think I would stop at that point because I believe I've explained to you everything that I wanted to explain today. Because I've seen most of you or most of the traders that are struggling. Even I personally, when I was a beginner trader, when I was starting trading, I was struggling with this the concept of inducement. I could just execute my trade, then all of a sudden I get taken out, then I'm left wondering where did I go wrong. Then after some point now, I opened my eyes and I started to learn and testing, doing a lot of practice, and that's how I managed to get to know the concept of inducement. So we need to master on how to look for inducement in the charts. Otherwise, you'll have a lot of unnecessary losses. So guys, until next time, it's a bye-bye for now. And before I go, kindly, if you haven't subscribed to the channel, make sure you do so. Don't forget to turn on the notification bell. And as always, guys, make sure you leave the comment because I always answer all your comments, guys. So which next area would you like me to make a video on? So see you next. Bye bye.